We have some pretty high profile, relatively mature private companies coming down the pike. On the other hand, it hasn't been all that busy. So how do you think the market will digest this IPO wave?
You know, I think this first wave should go okay for two reasons. The first is, as you mentioned, we haven't had a lot of tech IPOs. There were just 52 last year. In the heyday in the 1990s, we got over 250 tech IPOs every year through the back half of that cycle. So even though this feels like a big calendar coming up, it isn't really by historical norms, and particularly those norms that we worry about in terms of tech cycle tops and peaks. The second issue is valuations pretty good. Tech is trading 18 times earnings. That's a little bit rich to the S&P at 16.3, but not as rich as the consumer staples or discretionary or utilities or a couple of other sectors. So tech is a little bit rich, but not as rich as it was in the 90s. So this doesn't feel like a setup like it was in the late 90s.
How sensitive the IPO calendar might be to market conditions as things play out here, because you have Uber, which I think is for a year and a half is more or less penciled in when it was going to go public. They're not necessarily looking at day-to-day market movements, but I guess how fragile do you think the setup is?
The setup is more fragile than your typical upswing market, typical late cycle heavy IPO calendar market. Certainly worse than it was in the mid to late 90s, and I'd say sort of on par with the mid 2000s in terms of comparing different cycles. And it is, you're right, going to come down to just fundamental market volatility and risk appetites, because ultimately buying an IPO is one of the riskiest things an investor can do.